when you go through your material, you'll see in your study guide, you have different activities. There's revision activities, and there are different calculations. Okay, we're not going to look at them today. Okay, practice application next week. This week is basics. I want you to identify assets and liabilities, income and expenses that you come into contact with. Okay, so once you go through the material, as you're reading it, if you pick up an account, ooh, I see an account. I spoke about some today. I'm going to write them up. I spoke about a vehicle. Is a vehicle an asset? There's one we can insert. Okay. Other ones I spoke about. Furniture. Where would you put it? Definitely assets. I spoke about debtors. Where would you put it? Correct. Okay, but every time you insert it, I want you to be thinking about those definitions. Okay, so I know a debtor is an asset because someone is going to owe me something. Okay, they need to pay the outstanding sale. Okay, vehicles generate economic benefit. It's a resource. I can use it to do something. Right, those are three assets that we spoke about. We actually spoke about another one, bank. What is bank? An asset. Okay, money in the bank is considered an asset, something that you have. It's a resource. Right, liabilities, we can put one. Loan, we spoke about that, we mentioned that. Did we talk about any income today? Let me think. Maybe sales, we might have mentioned that. Selling, okay, sales is income. Oh, I spoke about rent income, okay, when we looked at an example. Expenses, the only one that I already spoke about was stationery, buying stationery. Right, buying stationery is considered an expense, not an asset. Why not? Correct, future benefits. Okay, so stationery. If I use stationery, do I get any future benefits? No. Can I still use the stationery in the future? The ink runs out. Okay, the paper gets used. Okay, if I use a piece of paper, if I write on a piece of paper, can I use that same piece of paper in the future? No, once it's used, it's used. Okay, so when stationery is used, it's used. Right, the vehicle, if I travel from one place to another, can I still travel to another place? Yes. Same thing with furniture. If I sit on the chair, can I still sit on the chair in the future? Yes, you can. Okay, there's still future benefit that you can derive from that asset. Okay. So those are some of the ones that we've covered so far. I want you guys to go back to your study guides, go over the material, and I want you to pick up all the different accounts they talk about. Okay, and there are quite a few. There's different ones. Right, we'll obviously see more and more and more and more and more when we go through more examples. If you want to, some of you mentioned that you've already covered some of the material yourselves individually. Okay, then maybe challenge yourself. Maybe look at more chapters and just look for accounts and see, well, okay, there's one. What is it? Would it be an asset? Would it be a liability? Would it be an income? Or would it be an expense? Okay, if you can identify what something is, that's everything. Right? And that's why I'm giving you this activity. I want you guys to interpret and to understand what accounts are in terms of their elements. Okay, so when we talk about accounts, it doesn't matter what the account is, so long as we have this at the back of our minds. Right, so if I'm talking about bank, all of us should be looking at assets, or we should be thinking about assets. Okay, if I'm talking about a loan, we should all be thinking about a liability. Does that make sense? Okay. Okay, so the question is, how do I use this acronym DEDLIC? Okay, so what did we say earlier? The 6 rules are important because you need to know those rules. So when I talk about an asset, and I ask you, where does an asset increase? You need to be able to tell me debit. Okay, debit side. Does that make sense? Okay, so when focusing on this, you're looking at rules that are specific for those accounts, okay, those elements. So an asset is what? A resource that we control. Do you agree? That asset account will increase on the debit side and decrease on the credit side. Okay, so now the reason why we have the acronym DEDLIC is to identify where the positive sides are for all of those different rules. Okay, so this is where we're going to go with this. All right, so if I'm looking at a vehicle, okay, first step is to identify, okay, let's write this down. This is extra notes that you can maybe look at. Step 1, identify the element. Okay, we'll just apply it to this simple example, a vehicle. So step number 1 is to know what it is. How do I know what something is? Bracket, refer to the definitions. That's how I know what it is. Okay, so let's go through the definitions. Is a vehicle a resource controlled by the business arising from a past event that gives rise to future economic benefits? Yes. It's not an obligation. It's not an inflow. It's not an outflow. It's not manual assets given to the business or taken from the business. Does that make sense? Okay, so now have you done step number 1? Yes. You've correctly identified what it is. Vehicle is an asset. See, this is what I need you guys to do later on when we actually do the application. Okay, so today it's just interpretation, it's background. Right, so there's like a few pages in your chapter 1. Chapter 1 is literally like short, it's just IFRS, GAAP, background. What is accounting? Okay, where things get a bit more, let's say, practical is chapter 2, chapter 3, and chapter 4. Right, because those chapters now introduce you to one page, which is this. Okay, and this one page is everything when it comes to application. The better you know this, the easier accounting is. Okay, so the first step is to identify what something is. So do I know what a vehicle is? It's an asset because it meets the definition. Now I need you to tell me, where do assets have positive side? On the debit side. Okay, so assets have a debit plus. How did you know that? It came from the DEDLIC. Okay, because DEDLIC means you're debiting expenses, assets, drawings. You're crediting liabilities, income, capital. Okay, so this is giving you that. Okay, but in words. Right, because what is this? This is debit assets plus. There's the plus. Okay, so DEDLIC is just a way to help remember all of these rules. That's all it is. Okay, so I'm remembering what these things are. Okay. Later on, we'll talk about effects, increasing and decreasing and so on. Okay, so I don't want to do step 2 and 3 and 4. We can do that later. There are more steps when looking at application. Right, so step number 1 is just knowing what you're dealing with. Do I know if I'm dealing with an asset? Do I know if I'm dealing with a liability? What am I dealing with? That's the key. Okay. You do need to know the rules. So if I talk about an asset, immediately you need to tell me plus on the debit. Okay. Let's talk about sales. Sales meets the definition of what? Is sales an asset? It's not a resource. Is sales an obligation to pay? No, it's not an obligation. Is sales an inflow of benefits? There we go. Now we've hit the jackpot. We know that that's the correct definition. Sales is income. Okay. Yes, now you need to tell me that the rule, okay, you can't say sales is credited. It's credited depending on the transaction. See, we haven't got there yet. Okay, next week you'll see transactions where you need to interpret what's happening. Okay, then we're going to be applying this. Right now, all I want to know is what is it and what does the rule say? Okay, so what is it? It's income. What does the rule say? Credit will have a plus. That's what the rule says. Credit will have a plus, debit will have a minus, the opposite. Okay, that's it for now. That's all you need to worry about. Okay, another example. I'm going to use other accounts. Let's just see how much of this you guys are okay with. I know a lot of you did mention that you have gone through some of the material ahead of time. Okay, we will cover more of this as we go. Inventory. See, you need to tell me what it is. So do you guys know what this is? Inventory. Inventory is goods that you sell or merchandise, products. Okay? What is it? Income. Do we get a benefit? Is inventory an increase in benefit? No. See, now you're talking about the selling. See, you're looking at double entry. See, selling is selling. Inventory is inventory. You can't change what something is. Do you agree?
Wait, let's go like you said.
Inventory is goods that you're going to sell. So inventory is goods that we're going to sell. Inventory is what definition? What does it meet? Future benefit. Okay, so do you agree inventory? Okay, have you ever sold anything before? Something as simple as, I don't know, selling sweets and chips at school. Yeah. Okay? If that's your inventory, okay, when you hold sweets and chips and that, is that inventory? Yes. Is it an asset or is it income? It's an asset because as it stands, I'm holding the chips, cold drinks, sweets, etc. That stuff that I'm carrying around with me is inventory, which is an asset. I'm not carrying around sales with me. Do you agree? Does it make sense? Okay. If you sell your inventory, now you're looking at a double entry. That's not what we're looking at in the first 4 chapters. All right, we can discuss that next week when we apply it. Right, this week I need you guys to get comfortable identifying what things are. Right, so when I talk about inventory, you should be thinking, what definition does that meet? I know it meets the definition of an asset, then you need to tell me the rule. Okay, I don't want you to tell me how do I use the rule. I just want you to tell me what is the rule. So what is the rule for an asset? The debit has the plus. That's all I want to know. That's it. Does it make sense? Okay, here's another one. Water and electricity. That's an account. What is it? Is it a liability? Any other options? Any other answers? You're going with expense. Okay, so we've got 2 options in the class. Okay, we've got liability. Is water and electricity a liability in terms of an obligation?
No, because you don't have to repay that.
Okay, if you're talking about water and electricity that you haven't paid, then that's something different. Because now you're talking about something that is an obligation. I'm not here. I'm just asking you, what is water and electricity? Water and electricity is something I use. If I drink water or if I use electricity, do I get it back? No. Once I use it, it's gone. Okay, so the lights are on, the power is being used. There's no way of getting that electricity back. Okay, if I'm drinking water, there's no way of getting that water back. Okay, once it's used, it's gone. Okay, it's an outflow of benefit. So do you guys agree water and electricity is a expense? Okay, see, that's what I want you guys to know. Okay, is think about the definition. What is it? That's step number 1. Then I want you to tell me what is the rule. So now tell me what the rule is for an expense. Okay, an expense will have a plus on the debit side. See, that's what you should be thinking about. Right, and the debt lit can help you with that. Or you can just memorize and remember these accounts. Right, because those are the rules that you actually need to remember. You need to know where the pluses and minuses are for all of these different accounts. Okay, does that make sense? Okay, let's do another one. You could even add these to your lists if you want to. Okay. Creditors, guys. See, we'll cover creditors in a separate section. Okay, so we'll actually describe who they are, how they come about, etc., etc. But let's just talk about it generally in terms of its elements. Think about the definitions now. Well, first of all, we need to understand what a creditor is. I think we need to recap that, just in case. I don't know how many of you are familiar with what a creditor is, how many of you aren't. So let's first cover that. Someone define what a creditor is.
Somebody I owe.
Perfect. Someone you owe. Okay, so you owe someone because you've bought something. Okay, so let's say you've bought, let's say you buy the textbook on credit. If you buy the textbook on credit, who do you owe? You owe the bookstore. You owe the creditor. Exactly. There you go. You've got the answer ready. Okay, so the bookstore is your creditor. Does that make sense? Right, so now you understand what they are. Right, so now you know what they are. Now you need to tell me what element are they.
Liability.
There we go. See, that's all I want to know now, is I want to know what it is. Okay, so now you should be able to tell me that a creditor, I now know what they are. I owe someone something because I bought from them. Okay? Creditors, as it is, so a creditor, meaning the person, the bookstore, is a liability. Okay, they meet the definition of an obligation. Now I need you to be able to tell me what the rule is for a liability. So what is the rule for a liability? Credit side plus. If I know what the plus is, then obviously the debit side will be minus. Does that make sense? Okay, that's why you've got these rules, debits and credits. Okay, last one more. Let's talk about equipment. What is it? Capital. What is the definition of capital? Money or assets that the owner has contributed. Do I know anything about anyone contributing anything? No. All I have here is one word, equipment. If I describe the transaction, maybe, but that's double entry. See, that's next week. Okay? This week, I want you to tell me what equipment is. Come, you've got 4 definitions. 6 definitions. Which one of the 6 does equipment meet? You thought it was capital? It's not. Why? Okay, what's the keyword for an asset? Resource. Okay, so is the equipment a resource? Yes. Can you use it? Can you do something with it? Is it yours? Yes. Does the equipment give rise to any future benefits? Yes. It can be used for something. So is equipment an asset? Yes. Now tell me what the rule is for an asset. Where is the plus? Debit side, plus. Okay. See, that's what you've got to be doing with all those different accounts. Okay, so next week I want to hear from you guys, what accounts did you find? Okay, what accounts did you find in the textbook? Are there any interesting ones that maybe you weren't too sure about? And it can be from anywhere in the textbook. I'm not going to mind if you guys jump 2, 3, 4, 5, 6 chapters ahead and you just look for these names, these accounts. Okay, just look for names. Names of accounts, names of accounts. Okay, and then we can discuss the ones that you find. Okay, maybe just to use a different one. Okay, we've got income, asset, expense, liability. Okay, let's put this one. What do you think that is? Good. Okay, so think about it. Do we receive discounts? Yes, we can. Okay, if we do receive a discount, is that a resource? No, there's no resource there. You just got a discount. So if you get a discount, did you get something? Yes, you got benefit, right? Does a discount help or harm you? Help you. Discounts help you because it's a reduction in selling price. So is a discount an increase in benefit? 100%. Okay, so now I know discount received, income. I know what it is. Now tell me what the rule is for an income. 100%. Income accounts have a plus on the credit. See, that's what you need to be thinking about. Okay, don't worry about how we apply the pluses and minuses. See, that comes later. Right now, I just want you to know what is it and what is the rule for it. That's the key. Okay, have I covered all of them? Income, yes. Expenses, yes. Assets, yes. Liabilities, yes. Okay, capital and drawings. The only account that you'll get for capital and drawings is capital and drawings. All right, drawings is drawings. It identifies itself. Capital is capital. It identifies itself. Okay, at this level, you guys will never ever see any other capital accounts, and you will never see any other drawings accounts. Okay, you can see other assets. Okay, that's why I'm talking about inventory, equipment. Okay, but capital for you guys will be capital. Drawings for you guys will be drawings. It'll never be anything other than those two. Okay, so when it comes to application, those two are actually easy to identify because they identify themselves. Okay, it's these four that you need to apply yourself a little bit in terms of assets and liabilities, income and expenses. Okay, remember the debit is just the left-hand side and the credit is just the right-hand side. That's all it is. It's just it's an accounting term to refer to direction. Okay, the left or the right. They talk about the debit or they talk about the credit. Okay, the reason for that is it just sounds nicer than like lefts and rights. Okay, all right, so debit, credit, it means this side or that side. That's it. Okay, there's literally no other meaning to a debit and a credit other than that. It's the different side of the account. Okay, any other questions?